Welcome back to the channel, everyone. Thank you for tuning in to another great video today. I want to talk about top-down analysis and why it's so important or crucial to traders, especially those that day trade, all right, during the New York session. It could be the London session or even the Asian session, but I primarily trade during the New York session. So the reason why top-down analysis, for one, is so important, and I also want to talk to you about the strategy that I use because they go hand in hand, all right? I'm not telling anyone out there to trade the same way that I trade, but we do have profitable traders that are part of our community, especially in the Discord, that have educated themselves based on the videos of sitting and watching today, not today's video, but watching the channel and watching the videos on the channel. They've educated themselves to how I personally trade and mirrored it and maybe even put their own twist on to make it their own. I always talk about if you pick up something, maybe possibly learn something that may help you in your trading and you want to put your own kind of spice onto it or add an ingredient to it, there's nothing wrong with that. Make it your own. Just so as long as it's working for you. That's the thing. That's the most important part, is that you become profitable and consistent behind it. Now, top-down analysis, basically all it is just being able to understand market structure and be able to read the overall trend of the market. Moving down from one higher time frame chart, okay, or it could be two, down to lower time frame charts. So you hear me talking about scaling down. We always want to pay close attention to what's going on a higher base or higher time frame chart. Now, I don't trade time-based charts. When I'm speaking of time frame, I'm referring to higher base or lower base. I just simply like to use the term time frame when I'm talking about the way that I actually trade, okay? I'm talking about this because I trade off using range charts. I don't trade time-based charts, tick, or volume. You know, if you do, that's fine. You know, whatever works for you, I tell people all the time, stick with it. Now, you know, please don't ask me what's comparable or what's comparable when it comes to time-based tick or volume to range charts. I have no idea because I always traded range charts. And if you ask me why I trade range charts, because it's just cleaner to the eye to me, all right? I don't like to see all those major big wicks and things of that nature. Range-based charts don't really typically, you know, you don't get those big wicks into zones or all over the charts. I like to make my trading as easy as possible and as clean and clear to the eye as possible. And personally, for my own preference, I believe, in my opinion, that range-based charts provide more possibilities, okay, of setups on trading supply and demand, because that's how I trade. That's the cornerstone of my trading is supply and demand. But what I talk about is, you know, top-down analysis using higher base or higher time frame charts, because you want to be moving in the direction and looking for trades solely when it comes to the direction off of the higher time frame chart. Why would you want to take a trade going short if the higher time frame or higher base chart is bullish to the upside and trending that way, and we have continuous breaks and structures to the upside? Why would you, especially beginner traders or new traders, why would you want to be taking you know, going against the grain? Okay, the market is bullish, so why are you looking to go short? Trade in the direction with the higher base chart. So the best thing to do is always make sure that you're in sync both with your higher time frame or higher base chart and your lower time frame or lower base chart. Make sure they're in sync with each other. If the market's trending up, then look for trades on when you scale down to your lower time frame charts to look for to go long, and vice versa. So let's take a look, because I want to show you an example, like with the market in this case here, looking at real time, looking at today's market, where the market was on a higher base chart moving to the downside, but then when we scale down to a lower time frame chart, it's pushing up. Do I want to be trading going you know, to the long side if the market or off the higher time frame chart is moving down? No. So let's take a look here. I'm going to show you. See right here, the market had been moving to the upside, breaking structure to the upside. Breaking structures are key. They're critical, especially when it comes to my style of trading surrounding supply and demand. But then we get this high right here. It must have hit some area of resistance off to the left-hand side of the chart, which it did, and the market turns and the trend starts to change. Now, the trend can change at any given point. Retail traders, we don't control that. But look what's taking place here. The market is moving lower, breaking structure to the downside, making moves, swinging, making lower lows and lower highs. We have a pullback here, and then it breaks a low right here. So it takes out this low here. We have a low here. So we're moving down, low, lower high, low, lower high, and breaking structure as well right here. So as long as the higher time frame or higher base chart is moving to the downside, what type of trades should you be taking? Shorts, correct. If you said shorts, then that's how you want to trade. Now, if you move down to a lower time frame chart and then all of a sudden you have your mind fixated on that chart only, but you for some reason forgot what's going on the higher base chart, you are going to get caught up in bad trades. All right, I'm going to say that. Again, if you're going against the grain, you're going to get caught up in bad trades, because why would you want to be fighting, a head-on collision? All right. So look, the market break structure right here. I want you to pay close attention to when I move down to my lower time frame chart and show you what takes place right here around 10 o'clock, 10:05 area on the lower time frame chart. You'll see where we start to move back to the upside, but the higher time frame chart is moving to the downside. Don't be looking for long positions, all right? It's smart to trade with the trend. And if you have a hard time identifying the direction, just use a trend channel, okay? You can see the market breaking structure to the downside. It's taking out areas here to the left. It's breaking structure, making lower lows and lower highs to the downside. So why would you be taking interest in going long right here if what I'm going to show you on the lower base or lower time frame chart starts to break structure back to the upside? It may look like we're going long or getting ready to change direction, and you could be telling yourself, oh, I'm going to look for setups to go long at areas of demand. No, look for still setups to go short at areas of supply. We are bearish to the downside. So this is that area right here, same area I just showed you on the higher time frame. Let's just take I don't trade with trend line, guys. This is just a channel here. You can do the same thing here on your lower time frame chart. That should tell you, if we could draw a channel on a higher base chart and it's moved to the downside and we're breaking structure, and we could draw the same channel to the downside on a lower time frame or lower base chart, then trade in the direction going short, because the higher time frame is king, or the higher base chart is king, is telling you to go short. Now take a look here. Even within a channel, you see where we start to break structure back to the upside on a lower time frame chart. I've moved down to my entry chart, my 12 range chart. But still, why would I want to be going long if my higher base chart is going to the downside? I don't want to do that. Even though we're breaking structure here, that's going to be very short term or very short lived. Don't do that, okay? I'm speaking to those individuals out there that are watching this video right now who are beginner traders and you have a hard time following the direction of the market. Just pull up a higher time frame chart. Look at it, okay? If you trade time-based charts, for example, all right? Maybe you trade using a 60-minute chart, and you allow that, you're using that as your higher base chart to determine the direction of the market. You have to be able to pay attention to structure, because that is the key, most critical part of trading. If the structure of the market is to the downside, but the lower time frame chart, maybe you're using a 5-minute chart, starts to move back to the upside and starts to break structure back to the upside, still, why are you going to go against the higher time frame 60-minute chart? Don't do that. Trade in the same direction as your higher base chart. So what we have going on here, moving to the upside right here. I'm not interested in taking any long positions, only short positions. And I'm going to be looking for areas of supply that in which the market could tap into for me to take a short entry. Okay. So the higher time frame is always going to be your friend. Trade, if you ever heard the term, trade with the trend, allow the trend to be your friend in a sense. Okay, so take a look here. I'm going to go into the strategy right quick and to show you how simple this is. So you already know to trade in the direction with the higher time frame or higher base chart. Whatever your higher time frame is showing you, move it to the downside, then solely look for trades on your lower time frame entry chart, whatever that may be. Okay, for me, I trade a 60 range chart. I'm not telling anyone to trade range-based charts, but I told you why at the beginning why I do so. Now, but my entry chart for me is my 12 range chart. It could be a 5-minute chart for you. I'm not saying 12 range and 5-minute charts are comparable or comparable to each other. I'm not saying that. I'm just saying I know people that trade based off time-based charts and they may be using a 60-minute as their higher base and a 5-minute for their entry. Whatever you're using, okay? So I'm going to give you an example, a rundown using the range charts. We're already seeing the 60 range that we're moving to the downside, all right? Now let's tap into the strategy. I'm going to show you how it works, okay? Now, what I like to see is that when we're moving to the downside, now we have a breaker structure right here. Breaker structures are a very important component to how I trade because it just tells me that the market is still moving lower. As long as we're taking out lows and breaking structure to the downside, I'm only going to be looking for short positions, right? All right, so look here. The market moves lower. We tap into an area of demand right here, right? But the structure right now is to the downside on a higher time frame. Am I interested in going long? No, because the structure is to the downside. This right here is an area of aggressive selling. Aggressive selling areas are supply zones. you can mark them up in your chart. And I have plenty of videos on the channel where I go to show you how to draw supply and demand zones, or at least how I do so, okay? I'm not telling anyone, some people trade, maybe draw them a little bit different, but I draw them the way I do, and there are videos on the channel which you can educate or watch yourself and determine how, you see how I draw them. So the market pulls back. We have aggressive selling right here to the downside. We just broke an area structure. We're in a channel to the downside. I don't trade trend lines. I trade with these two things right here, my eyes. As long as I can see it, and if you have a hard time, just draw a channel. Simple as that, okay? If you're using InterTrader, all you have to do is go to your 2 options and go up here to trend channel and draw a channel. And all you're doing is marking higher highs, lower lows and lower highs to the downside. And as long as we're in that channel, I already told you what to do. So pull back to a key area of supply right here. Once we mark that area of supply, why is it supply again? Because we have aggressive selling. It broke this area structure. Go ahead and mark your zone here. One of the key things I like to see at an area of supply or demand, in this case here, is there a imbalance or gap back at the zone? Basically a gap. Yes, there is. As long as there's a gap back at the zone, that also marks a major ingredient, which is part of the recipe of the strategy and how I trade, because it allows me to basically state that that zone is a high probability zone. We haven't tested it yet. And if there's quick movement from that zone, that means the banks and institutions were trying to fill orders fast enough, and they probably couldn't get them all, they probably couldn't get them all filled quick enough. So the way that I logically think, the way that I like to see things in my mind, if they move quick enough and there's a gap right here, and that more likely orders were left on the table, when they get back there, I tell myself, what's going to possibly happen? There could be a means of rejection in this zone, and that's all I need is just confirmation, just rejection back at the zone to go short in the same direction in which we're already moving off the higher time frame. Now let's move down to a lower time frame. I'm going to take this box right here. I'm going to bring it across all charts. Okay, and that way we're going to move down to my lower time frame chart now. Scale down approach. Okay, that's what top down analysis is, using a higher time frame to give us the gauge, to give us the direction, to tell us which way we should be trading. Moving down to the lower time frame, this is going to be the entry point right here. This is all the strategy is. Okay, we're on the 12 range chart. We're in the zone. We're back to the zone now. You see that, correct? All right, so this is the first time we actually tap into this zone right here. You see it? Right here around 10:05, we tap into the higher time frame or higher base chart zone right here. But take a look here. I want you to pay close attention to this. What I talk about all the time and what aids me in my trading is that when the market approaches and it taps into a zone, if we get a big bullish candle like this into a zone, more than likely the market is going to do what? Dig deeper into the zone. If we get up here, tap into the zone, and then we get a bearish candle which wicks it right at the zone, okay? Take the tick, or maybe just a few ticks on the inside, and starts to push in the opposite direction to the downside. That, even off of a higher base chart, so let's say the market, it retraces back to the zone, then we get a bearish candle to the downside that starts to try to slightly form. But there's a wick that moves away from the zone. We hit the zone here, move away from it on a higher base chart. Okay, I'm really interested because the market is showing me that it's rejecting the zone even off a higher base chart. But when we see a bullish candle like this, digging deeper into a zone like this, all right, I'm going to wait because what it's probably going to do is close. And if it closes into the zone with a bullish candle, then I'm not interested to look for shorts. Look for shorts at the opportunity because I want to see how things are going to play out. Will the next candle that forms, once this bullish candle here closes, will it start to basically form to the downside, okay? Meaning we get a wick and then a bearish, the body of the candle starts to move lower away from the zone. Then I would say, okay, that would interest me more. But not a bullish candle that's forming into the zone. I want to see that first candle that touches, I want to see it be a bearish, forming a bearish candle back to the downside with a wick at top moving away from it. Okay, not closing into the zone. In this case here, what you see right here at 10:05, we're going to go down to the lower time frame now. This area right here, that was that bullish candle off of the higher base chart. I'm not going to be interested, okay? It's not a bearish candle that's giving me enough confirmation to look for something that happened there. And look what happens. When that bullish candle closed on that higher base chart, what did it do? It just pushed up higher. Now, this area right here at 10:07, go back to the higher base chart. What did it do right here? This is that formation. This price action activity we see forming right here, okay, off the lower time frame chart is from the higher base. What we see forming, I'm sorry guys, what we see forming here off of this bearish candle forming on the higher base chart. we got the formation of a bearish candle that digs a little deeper, but it's wicking the area, pushing it back in the opposite direction. Now, when I see that, then I'm going to tell myself, okay, let me move down to the lower time frame to see if now it is going to be a setup for me, an opportunity for me to take interest into a trade. Again, keep in mind, this area right here is that bearish candle that's moving and forming to the downside with the wick moving away from the zone. Is there, now, what I want to see now also, is there a supply zone off my 12 range chart? Right here. Okay? It's a supply zone. There's an imbalance resting on inside the zone, even though we came back and tapped that zone right here. All right? I talk about that a lot of times about high probability, low probability zones. Okay? But because we have a imbalance, okay, a fair value gap back resting back inside of the zone, is still an area that could be taken into consideration, because of the fact is they could definitely fill this area here and move away from it, right? On a lower time frame chart, a 12 range chart. Take in mind again, be mindful, this is that bearish area here, that bearish candle we see forming, moving away from the zone right here on a lower base chart. This is excuse me guys, this is the demand zone. I mean, excuse me, not demand zone, the supply zone, sorry about that. Moving, oh, oops, it didn't do it here. I was trying to get it to change red. Okay, so on the 12 range chart, we go ahead and mark the zone 2. So we got a supply zone mark on the higher base chart and a supply zone mark on a lower time frame chart, and that bearish candle that's moving to the downside. All right, we see it all forming and coming together. All right, now once we have marked that higher base, the lower base chart, lower base 12 range chart, supply zone here, all I'm waiting for is a break and close of a candle. That last bullish candle that closed into the 12 range or lower time frame or lower base chart supply zone, I'm looking for a bearish candle to close below it, meaning break and close below it. Right here, this candle right here. Right here below at 17,675 will be my entry point. And if we go back to the the higher base chart, where am I going to take interest to take profit out? At least, if I have maybe multiple contracts on. Most position, if you got multiple contracts on, maybe you want to leave one as a runner, right here back down to 65, 64 area. There's an imbalance right there. There's a gap right there, okay? So again, I said the break and close of the candle off the 12 range supply zone, right here at 75, take it down to 65, and you scalped yourself 10 points. Just that easy. And the reason why we want to possibly get out around this zone here, and maybe you can take it a little bit lower. I mean, maybe you can allow it to have a runner to run and see how much lower it actually go. But if you look to your left-hand side of your chart, I always talk about the imperativeness of pay close attention to what's going on the left-hand side. Stop being so focused on what's going on just right here in this area. You always have to pay attention to price action to understand what's going on right below and to the left-hand side. There's support right here. There's support right here, but there's support right here as well. When we see that and price hasn't broken through this area yet, it may not break through it. It may come down, hit 65, and then start pushing higher. But we know at least that it's going to test and fill this area of imbalance or this gap back down here at 65 first. So go ahead and scalp it from 75 at close, at the break and close of the candle below, down to where? Down to 65 and get your 10 points easy. It's simple as that. But the key to everything is structure, paying attention, using your higher base chart, moving down, top-down analysis, and trading in the direction whatever is the higher base or the market is showing you off of a higher time frame or higher base chart. It's that simple. It's extremely and that easy, and that's all you really need to do. Now, I know I have some people that are part of the community say, well, I thought you normally look for a break of structure on the lower time frame or lower base chart before looking to go, for confirmation to take your trade. Yes, but what you need to really hear, pay close attention. What do I also say when I say that? I say that if the market, take a look here at the higher base chart again. If the market pushed down and broke structure right here, and then I'm going to show you because I do this, so people can see. If the market pushed lower and broke structure right here, then came back and then broke structure again, all right, and I say, then, but we have to be mindful because now we broke structure against the downside. We broke it here, push down, pull back, lower a high, and then made a lower low. The longer that it takes for the market to pull back to a zone, if we continue getting breaker structures and the market doesn't immediately pull back to the zone, then I have to be I'll be more mindful when we get back to the zone, looking for a breaker structure, okay, set up to unfold on the lower time frame chart. But in this case here, that's not what happened. We broke structure right here, and we immediately came back to the zone. Meaning, after we broke and made this low here and broke structure right here, the market all it did was retrace back to a key area of supply, all right, within this swing to the downside where structure was broken. Again, I'm going to reiterate that. If the market breaks and doesn't immediately come back, and we break structure again, but then we pull back to this zone right here, I'm going to then move down to my lower time frame chart and look for that setup in which I talk about, because we took longer to get back to the zone, okay, on the higher base or higher time frame chart by basically breaking more structure to the downside. And the more structure we take and the longer it takes to get back to a higher base or higher time frame zone, when it does get back there, okay, then I'm going to look for on the lower time frame chart the breaker structure setup that I talk about. Price breaking structure lower on a lower time frame chart, okay, on the 12 range, pulling back to a key area of supply on the lower time frame, the 12 range chart, to look for a setup. But because we didn't need to do that because the market immediately pulled back to the zone. All right, I use that technique of looking for the breaker structure on the 12 range chart, the lower time frame on my entry chart, only when the market continues to break structure continuously to the downside and takes longer for it to pull back to a key area of supply, or it could be demand. All right, but again, if we immediately pull back to that zone and we haven't broken structure again, because we didn't push down here, pull back and break structure again. We immediately pull back to the zone. Then all I'm going to do is look the moment we get back to the zone to identify a key area of supply on the 12 range chart, resting on the inside of the higher time frame 60 range, higher base or higher time frame chart, and look for a setup with the break and close below. Okay, hopefully you understand that. All right, try to be as clear as possible with and informative with that bit of information there. But that's pretty much it. That's all you have to do. Is this is top-down analysis at its best. Just all it is looking on a higher base chart, determining the direction. Okay, once you got to the direction, trading supply and demand. In this case here, we're trading supply. Okay, look for the pullback to a key area of supply on the higher base or higher time frame chart. Move down to your lower time frame chart. Look for the setup to an area of supply on your lower time frame chart. Look for the rejection and go short. Be mindful of what's below you when it comes to price action. There could be support right below you. All right, so be mindful where to take profit at as well, which I just showed you where to take profit. Okay, the next question people are going to ask is, where should I put my stop loss? Put it at the back end, say for instance, of a supporting swing. So in this case here, there was really no area of supporting swing because we're taking the trade. I mean, there is, but a lot of times what I like to see when we get that continuation of breaker structure to the downside, which we didn't get on the higher time frame, and it took us longer to get back to a zone, we retrace immediately back to the zone, right? So this is a supply area. This could be the supporting area structure right above here, the back end right above at 684. Give yourself some breathing room. Maybe a few ticks, 6, 7, 8 ticks. Okay, that's like 2 points. Okay, because a lot of times they will try to check that area and run your stops. They know people are getting into trades in this zone right here, and a lot of times they'll run up there, check it by a few ticks, tick it out, and then run it to the downside. They know people are trading in this area here. Okay, or looking to go short, interested in going short. So, but that would be a possible area definitely to put your stop loss at, those that trade with hard stops. Okay, so I've covered the strategy and how to do it. What to look for when it comes to the top-down analysis approach, and that's all you really need. That's all you really need. The thing is just back testing it and watching the videos, okay? Because there are little details and things you may need to iron out. It takes time, but we do have, like I said, successful traders that are part of the community and trade similar to exactly the way I trade, similar to, they may have their own little twist or version of it, but they're successful. They're finding success and profitable and consistent traders today. So, but if you're interested in joining the Discord, just find the link down in the description portion of the video, okay? And if you're not a sub or a subscriber to the channel and you want to kind of educate yourself, the videos are there. You can spend time watching them, take notes, okay? It's there. Just everything you need to possibly to understand the way I actually trade. There's tons of videos here that are a part of the channel. The Discord link, if you're interested in joining, again, is down in the description portion of the video. You'll see the Discord link there. But if you haven't subbed to the channel, please take the time to go ahead and subscribe to the channel. Make sure to turn your post notifications on to ensure you never miss one of the uploads. And last but not least, please drop a like on the video if you found value in the content. I'm just trying to show you top-down analysis from my perspective, how I trade each and every day, how I'm able to stay with the trend and trade in the direction of the trend, because that's the biggest thing. For all beginner traders and new traders out there, please do yourself the biggest favor. Trade with the direction of what the higher time frame is showing you. That's all I have for you. I'll see everyone in the next video. Take care.